Hi, I'm Jubak, and welcome to my YouTube video for today, April 22nd. Happy Earth Day. In honor of Earth Day here in New York, temperatures have plunged into the 30s, but fortunately not far enough to actually freeze, so we haven't killed any of the flowers, and they're all in an incredible bloom. I was walking in Morningside Park yesterday and noticing the tulips have gone crazy, as well as the cherry trees, and we even have a couple of red buds. If you want to follow my online stuff, I've got two sites. One is jubakpicks.com, that's free, and there are 3 portfolios and new posts every day. The second one is my subscription site, and that's jubakam.com. That's got 6 portfolios and many more posts every day. So if you want just as much of me as you can possibly consume, subscribe. If you like this video, like it. And of course, you can subscribe to the YouTube videos, which means that you get notice of any time a new one goes up. The title for today's video is, I would say, 6 picks for next week's earnings flood. Okay, so today, the market is basically not paying much attention to earnings because there's a rumor floating around reported by Bloomberg that Biden is going to raise the capital gains tax rate to 40%. Everybody's going, oh, should I sell before this happens, if it happens. And earlier in the week, we've been having earnings, but it's really been dominated by worry about what's happening in India and Brazil and the rest of the world with vaccinations. But next week, I think we're going to get so many earnings reports and from such crucial companies that we're not going to be able to ignore earnings. In fact, I would call this an earnings flood. Okay, we've got 2 totally different groups of stocks that are going to report next week. One is we've got all the big tech stocks reporting. We've got on Tuesday, the 27th, we've got Google and Microsoft. On Wednesday, the 28th, we've got Facebook and Apple. And on the 29th, we finish it off with Amazon. So these are the tech stocks that have been going up, even when people are saying, well, we don't know what's going on with the economy. They're all going to report really good results. The question is whether it's all baked in the stock price, but we should get lots of really good news out of that if nothing else should set the tone for the market. There's another group of stocks that are reporting, and these stocks, I think, belong to what I would call the post-vaccine recovery economy. The story is that the economy will get much better now that everybody's getting vaccinated and we're seeing things reopen. And here we've got Omnicom, which is a big advertising house, or many houses actually, and that's on Tuesday the 27th. And then we have MGM, Resorts International, casinos and hotels in Las Vegas, Six Flags on the 28th as well, big amusement park operator, Wyndham Hotels on the 28th as well, and then finally, not next week, but a little down the road, we've got Disney reporting on the 13th of May. Okay, how do you play this? What's going on? Let's look at some charts. First one we're going to look at is Facebook. Facebook is interesting for 2 reasons. Well, 3 reasons. One is that look at that. This gain in this year, but what's more importantly, Facebook is both a technology and a consumer stock. That basically Facebook has been going up until it peaked here on the 7th of April and has been going down lately because people have been selling off the big techs in general. But the story really was that more advertisers are buying more ads. Facebook's getting a big hunk of ads, and this should push revenue. This is also going to be true for Google and for Amazon, but Facebook is sort of the purest play on digital advertising. So that's one stock that I would look at to report really good earnings next week, and that would set the tone for both the big techs as well as for what I call the vaccine recovery stocks. In that group, what I would like to urge you to look at is Omnicom. You know, it's another advertising stock, so you're getting the same thing. It's not quite as big because it doesn't have the big tech, but you notice this is a stock that hasn't sold off because it's not big tech. So basically here you're looking at a stock that's likely to, reports on the 27th on Tuesday, so you're likely to see good news from the advertising and good news from advertising revenue in the first quarter, as well as good guidance for further quarters. So this is going to be a big, to me, indicator stock, and one that I would look to own. MGM is a stock that we've talked about. I've talked about a number of times. It's, Las Vegas is coming back in terms of revenue. Nevada is pretty much all opened up. This is a stock that's got, the company has a predominant share, owns the bulk of the hotel rooms on the Las Vegas Strip. It also has a really big and fast-growing online gambling unit. So you get those two things going on here. So again, MGM should, I think this is possibly all in the stock. You notice it's sort of been sitting here, not going much of anywhere recently. But another one that I think is a good indicator. If you want an even more a purer play on the reopening economy, I look at Six Flags. Six Flags is a kind of concentrated company. It operates amusement parks, theme parks, entertainment parks all over the country. It's got a big presence in California, and what you're starting to see here recently is a little uptick on good news out of California, where California has allowed its entertainment parks to reopen, 25% capacity, but what companies have been reporting is that they are sold out for weekends. No more tickets for all of April and into May. So again, a nice play. Wyndham Hotels, which is a stock that I've talked about a number of times, so I'm not going to talk about it again. So these are all companies that I think will do really well in next week's earnings. The question is how you play them. You're not going to see a really big pop in the short term. I think these are good long-term stocks you want to own. If you're looking for trying to get something that looks at the whole group, you might want to look at something like the Russell 2000. There's a good ETF that tracks it. The iShares Russell 2000 ETF, symbol IWM. What's been really interesting is that the Russell is an index of small cap domestic stocks. Domestic in the sense that they get, as small companies tend to get a preponderant share of their revenue from inside the United States. They have almost, in contrast to the big S&P companies, they have almost no international revenue. So it's really based on what people believe is going on in the domestic economy. So if you're looking for something where you might get a good bump out of next week's earnings for those post-vaccine stocks, this is a good one to play. It's set up a pretty decent base here at 220, so you might be able to get a move up in this. And we'll talk about the way to leverage that in a minute. And the last thing is the QQQ. This is the Invesco QQQ Trust. This is an ETF that tracks not the NASDAQ, but the NASDAQ 100, which is dominated by that group of big tech stocks that I talked about, Google, Microsoft, Facebook, et cetera, et cetera. You notice that it basically has been doing slightly better than if you look at the chart of a Facebook, but still showing some weakness on weakness in technology. But again, this is going to track, I think, those big tech stock earnings from next week. As I said, I don't think you're going to get a huge pop. You're not going to see a 20% move in the week. So the question is, well, if you want to own them for the long term, I think these are good stocks to own, both the big tech stocks as well as the post-vaccine stocks. But I'd also look at the possibility of using options to get some more leverage out of this. I wouldn't use the options on individual stocks. They tend to be really volatile, and the volatility pushes up the price of the options right before earnings. So I think if you've seen the earnings related volatility move in the options already. But if you want, I think you've got a chance to play the IWM. You can use options on that, or you can use options on the QQQ the Invesco. And I think here what you're going to do, especially with the Russell, I think we're getting pretty decent moves on the Russell day to day with people changing feeling about the economy. This is a pretty volatile market. So I think an option play on the Russell as we go into the next week's earnings is a profitable move. And I don't think you've seen yet the big bulge in volatility that has driven up prices here. So those are the 6 picks I'd recommend for next week's earnings flood. Let's go back to me. Hi. So again, I think we're going to see, the question is, there are lots of things going on in this market, as this week has indicated. We've got fears about what's going on with the pandemic in Brazil and India. We've got, all this question about what the Biden administration is going to propose in terms of raising revenue to pay for its infrastructure. But I think next week we're going to get a market that's really, really connected to earnings, because the earnings are going to be such a big group of really important tech stocks. And I mentioned all of them, all the big techs basically are reporting next week, and a good representation of post-vaccine recovery stocks. So I would look to see that news dominate the market. I would look to see those stocks move up strongly. And I think if you want to play them, I would suggest, and you get a little extra leverage, you can buy options on the Russell 2000, the IWM ETF, it works, or the NASDAQ 100, which is the QQQ ETF. If you want to see more of my stuff, you can go to the free site, jubakpicks.com. If you want to see even more of my stuff and more portfolios, six total portfolios, ranging from long-term to options to, I've just started a new millennial portfolio. You can go to jubakam.com and subscribe. Thanks very much for listening. Don't forget to like and subscribe. This is Jim Jubak for Happy Earth Day.